According to the information acquired from the Central Bank of Nigeria, external reserves increased by $243.83 million in 19 days. The Apex Bank's data on reserve movement shows that the reserves increased from $39.54 billion on April 1, 2022 to $39.78 billion on April 19, 2022, and that was after external reserves declined by $313 million in March from $39.86 billion at the start of the month to $39.55 billion on March 30. Now, the mild accretion to reserves reflects the duality of Nigeria's status as an oil exporter and importer of refined petroleum products. CBN Governor Godwin Emefiele remarked at the latest Monetary Policy Committee meeting. Professor Mike Obadan, a member of the Monetary Policy Committee, stated that the oil industry has provided over 90% of the country's foreign exchange profits and external reserves accumulation for a long period. He said that crude oil and gas export earnings had been a key addition to the government's Naira revenue. He also explained that this has not been the case for some time now due to two factors. One, a large volume of crude oil theft that has prevented the country from meeting even the OPEC-approved production quota. And two, the NNPC's inability to make any remittance from direct oil export sales into the Federation accounts and external reserves accounts for many months. Now, these disturbing events have had a negative influence on the government's finances, the accumulation of foreign reserves, and the stability of the currency rate, the professor said. And so today, we will be discussing Nigeria's report of a foreign reserves hike by $244 million. This is Business Edge. I am Lekan Onabanjo, standing in for Tolulokpe Adelere Balogun. You're welcome. Joining me from Lagos, Nigeria is Dr. Soji Akinyele, an economist and government relations expert. It's a pleasure to have you, Doctor, join us on Business Edge.
Thank you for having me.
Now, Nigeria's external reserves increased by some $240 million. That's according to the Central Bank of Nigeria. Now, what accounts for this increase and what significance does it hold for the country?
Thank you very much. So when you think about external reserves, there are a number of compositions to that. Basically, assets that are held in foreign currency on behalf of the holding country. In this case, this could be financial instruments that have been invested into in foreign currency. This could be gold assets or even the IMF's special drawing rights and things like that. Of course, as you had mentioned in your narration, a lot of the revenue from export sales of oil also account for that. So when we see accretions like these are typically what we call movements in the reserves. And if you look at it, we are on a net effect just a little over or a little below where we were in March. So you've gained $243 million. But in March, there was a decline of about $313 million. So give or take, you're just still hovering around that $39 billion external reserve mark. And if you were to put that in perspective, we're just about where we were in April 2021, in the sense, about April 2021, we saw about $34 billion in the reserves. By October, that had peaked to about $41 billion. If you stretch it all the way back to 2008 or thereabout, when we had a peak of about $62 billion in our foreign reserves, then you begin to understand how far we've come or how far we've fallen in the reserves and what needs to be done in order to match that gap. Given the global shocks and the global economics as well as the domestic fundamentals that we have in the country. A lot of that speaks to as you had mentioned as well, the duality of us being exporters of the raw crude, but also importers of the refined petroleum product. And so we are not able to benefit from, extract maximum benefit from oil prices, above $100. We're at about $103 per barrel now. Also, we find that, in terms of even production of raw crude, we are way below our OPEC quota, which is about 1.7 million barrels per day, whereas we are producing about 1.2, 1.3 million barrels per day, as are the numbers recorded in February. So that is the context in which, reserves have been moving, in the sense that, exchange of foreign exchange accounts for almost 80 to 90% of, the oil sector accounts for almost 80 to 90% of our foreign exchange earnings. And so that impacts, directly on the reserves.
Okay, but then obviously Nigeria is not making enough as it should. But then from a 39.54 to a 39.78, doesn't that imply that the economy is burgeoning, so to speak?
Yeah, gradually. I mean, you will see. Of course, you have to recognize the movements, and they are positive. But what we are saying is that a lot more needs to be done in order to extract the value that you require in order to see significant accretions to the reserve. So what I mean by that is, okay, you've counted 19 days in April, and we're $242 million up. In another 2.5 months, by June, we may be about $300 million down. Why? There is a Euro bond that is going to be redeemed in June, which is about a $300 million Euro bond. That will have a direct hit on the reserves in terms of, the redemption of that bond, or whatever, innovations are made to redeem that bond. So I'm saying that those movements, give or take, especially when it comes to $300 million, $243 million, do not essentially move the needle for the reserve, in the sense what needs to be done really are more fundamental, or structural things, such as solving, for instance, the gap in the production quota, so that we're able to extract more value from, the above $100 per barrel oil prices that we're seeing now. What needs to happen is, limit or, mitigate the risk of oil theft, in the Niger Delta area. What needs to happen is ensure that the NNPC is now able to remit, revenue from direct sales, and, make sure that there is a proper audit of what is going on there, in order to make sure that the risks, of non-remittance are mitigated in the short term. In the medium to long term, what needs to happen is that we need to diversify that revenue and that risk away from just oil export earnings into non-oil export earnings, and also even an equity-based approach to expanding the foreign reserves. And I'm speaking directly to the model that we have seen in terms of, the Aramco deal, where just about 1.5% of equity was listed on that oil corporation, and we saw a market cap of almost $2 trillion. We believe that the NNPC and other state-owned enterprises, even beyond just oil, corporations, can follow suit, and we can extract significant value. Those are the things that actually move, reserves, and put us in a better place in terms of import covers.
So then, let me ask you, Doctor, can this increase in the external reserves influence the value of the Naira and availability of Forex? Because this actually put a strain on doing business in Nigeria as we speak.
Oh, yes. I mean, in the sense, the exchange rate mechanism, ensures that, this kind of supply, in terms of, external reserves, has an impact, on the demand for Forex, in the sense. We heard in the news, I believe this morning, or on the sidelines of the spring meetings going on, that, the central bank governor mentioned that he will not, be seeing a full free float of the foreign exchange mechanism. Rather, he prefers a managed float, just because of the fundamentals of the dynamics that we experience in the country. So you are correct. There is impact. It keeps the pressure on the exchange rate. It keeps the pressure on the value of the Naira, because we're not able to fund or support, as we would want to, or rather we're not able to float, as we may want to. Also, there's the issue of, the inhibited or the prohibited items, about 43 of them, all the way back since 2015, still prohibited. And, because those items are core, dependencies when it comes to consumable imports into Nigeria, that also applies that pressure on the exchange rate. So the interventions of the CBN from time to time, or, its policies around ensuring that the parallel market price discovery is no longer the area where, price is being determined, but rather via the official rates, but we know that that parallel market still exists. Just all these, actions or activities are impacting pressure on the exchange rate itself. So it's not just external reserves alone. There are a lot of other factors to consider, but indeed the external reserves, shows a significant portion of it as well.
All right, we get to consider other factors associated with the external reserves, but then we just quickly go on a break and we'll be back with you in a bit. Now, the oil sector has contributed over 90% of the nation's foreign exchange earnings and external reserves accretion, and it has also been a significant contributor to the government's naira revenue through crude oil and gas export receipts. The Russia-Ukraine crisis seems a more viable avenue to even earn more from the sector. How, you may want to ask, and is even the Nigerian government taking that initiative? Our guest will shed more light on that after this break, so you get to stay with us. We have more conversations going on Business Edge. We'll be back. Still with me is Dr. Soji Akinyele, an economist and government relations expert, to help us understand the factors responsible for the recent increase and previous decrease in Nigeria's external reserves. And so we go back to him. Dr. Soji, now the ongoing conflict in Ukraine ideally should actually lead to a windfall in Nigeria's revenue as we speak, because of course you talk about the volatility in the price of crude oil globally. But then tell us, do you think that Nigeria is taking that initiative? Are they benefiting in any way as a result of the crisis between Russia and Ukraine?
Thank you very much. Yeah. And, without any disrespect to the challenges, or if you like that, crisis, it is unfortunate that, in times of war and things like this, those shocks push up energy prices, and it will be that oil producers, tend to benefit from such. At $100 per barrel or more, we have seen Nigeria move to external reserve amounts of almost, $60 billion thereabout, as far back as the 2000s and 2008. So we know what it means to enjoy, oil prices above $100 per barrel. What we are seeing now is a situation where we are not able to enjoy that much, largely because not even of the international shocks or global shocks, but largely because of domestic fundamentals, structural issues within the country. So we're not extracting that. Chief among them, for instance, is making sure that we are even able to bridge the production gap and ensure that what we are exporting in terms of oil is at the peak performance in terms of a peak amount that we can do, which is the OPEC production quota at about $1.7 million barrels per day. I beg your pardon. If we are enjoying that, then we begin to see some modest accretion to the external reserves. And then we come to the import side of things, which is the importation of the refined product, which therefore means that, if you consider, the 4 trillion naira subsidy that has just been approved, then you begin to understand, that's almost 30% of the total budget for the year, or almost 60% of the initial deficit budget in the sense. Then so you begin to understand what we need to cut off in terms of what you could call government waste or subsidies, in order to be able to enjoy as much as possible from the export and the production side of things. So that is where, the economic managers need to innovate and ensure that, in the short to medium term, these kinds of things can be solved. There are the challenges within the NNPC, as we mentioned, and auditing that process and ensuring that direct remittances can be made to the reserves and to the Federation account.
Yeah, okay. Go ahead.
Please go on.
Go ahead. I wanted to.
Right then. So that's a very important point where in the short term, you need to ensure that all loopholes that you already identified, the economic managers have identified this. If you read the NPC communicates there, if you read any mentions by the Ministry of Finance, it's there. So it means that these loopholes have been identified, and those should be plugged in the short term to enjoy currently what we see, as $100 and above in terms of the oil price.
Yes, I'm glad that you mentioned the issue of blocking off loopholes. Now, one of those loopholes is crude oil thefts that is making Nigeria lose about between $4 and $5 billion over the years. Now, how do you think that loophole can be blocked? And of course, how do you think Nigeria has been able to manage and make up for the shortfalls within that period up till now?
Well, it begs the question. We have, policies in place that have been put together to ensure, that this oil theft issue, comes to, if you like, a logical conclusion. First, there's a security challenge to that, and so the security forces, ensuring that, just along the pipeline vandalism and things like that are being kept in check. But more importantly is to understand the reason for the oil theft. The reason for the oil theft is basically creating a parallel market for selling crude, right? So if you are able to identify that parallel market and see how to bring that back into, the formal structure of export sales or crude production and crude sales, then you will have solved that to a large extent. I recall a time when the proposition to that was the establishment of modular refineries, which basically means, smaller size refineries or smaller size, if you like, exploration channels within, the Niger Delta and the South that ensures that people that otherwise would have, stolen oil and all of that are now basically bought from them, almost formalizing, those that are doing genuine business. So I think that is a way to plug those loopholes. Perhaps that, that policy or that initiative should be revisited and aggressively implemented to ensure that as much as possible, we're able to ramp up our production back to the OPEC quota, which is at about 1.7. We're losing almost 500,000 barrels per day, if you can think of it that way, from 1.2 to 1.7, and that is significant when you think about oil prices above $100 per barrel.
Now, according to reports, Nigeria will be spending about 94% of its revenue on servicing debts. Is it inevitable? Because, of course, it will be adding to the debt issue that the country is trying to grapple with as it is. Is there another means by which they can cut down on the servicing of debts? Or what can actually be done to address that particular issue?
Well, inevitable in the current stance, perhaps. In the very short term, you may find that because of how policy works, you need to take some short-term measures. So in the short term, this may look like, something that can solve it in the sense that, look, let's look for more concessionary loans at, concessionary rates at much extended tenors. Let's tap into the Eurobond market, and all of that. Those may help, but those are solutions still on one side of the balance sheet, which is the debt side of the balance sheet. We are saying that it's important to begin to consider in the medium to long term, and perhaps if there are some low-hanging fruits there, for instance, like the NNPC, to look at the asset or the equity side of the balance sheet, which basically means identifying the value that exists within state-owned enterprises, within moribund assets that can be very quickly revamped, and extracting value from those assets. Again, the best example, because we are an oil exporter, the best example today is the Aramco story, currently valued at $2 trillion, right, as in a market capitalization on the Saudi exchange, and only sold 1.5% of its equity. So we are not talking about ceding ownership of national assets. We are talking about basically extracting value from what we have right now that may not be that is not being effectively utilized or managed, as a national asset.
All right, so finally, Doctor, what's your position on the Sovereign Wealth Fund? Do you think Nigeria can maintain one?
We are maintaining one, and we have done a very good job, in that area in terms of the Nigerian Sovereign Investment Authority. Perhaps the challenge of the Sovereign Wealth Fund has really been the fact that we haven't seen regular, if you like, investments into that fund in order to, create, future investments across the three categories of the fund, which speaks to infrastructure projects, the future fund, the three investment funds within the Sovereign Wealth Fund. We see a similar approach now that the infrastructure company, Infraco, is taking, where we're looking at almost 15 trillion naira or thereabout in terms of a corporation that is dedicated, towards infrastructure development. So I think that the Sovereign Wealth Fund has done, as much as it can within, the investment philosophy, within the investment structure that has been available to it. So for instance, we have investments in sustainable infrastructure. We've seen, a few high-end hospitals being built, a few road networks being developed, and all of that. That is for want of words, proof of concept that the NSIA can do its job. What then needs to happen is that the NSIA now needs to be empowered more in terms of, the regular investments that should have been going into the NSIA in order for it to expand its portfolio and do really what it's mandated to do.
Thank you so much, Dr. Soji Akinyele, for joining us on the show. Of course, as a Nigerian that you are and I am, we are optimistic and hoping that the external foreign reserves will continue to grow and they would continue to put the act right to see that positives are recorded as the time goes by. But then we appreciate your presence, sir. Thanks for coming on board.
Thank you. Thank you.
Now, no doubt, there are alarming developments which have been impacting government's finances and external reserves accretion. With the reported increase in its reserves, it seems some of the inhibiting factors are gradually being dealt with. It would only be wise if the approach is holistic to make it more robust in the coming months. We quickly go for this break. When we return, it will be time for NC4 to watch. Do stay with us. Let's take you through the top 4 bankable stories in the business world on NC4 to watch. We start with Transcorp Power Limited, a subsidiary of Transnational Corporation PLC, is currently adding 590 megawatts of energy to the national grid. Transcorp Power's generating capacity was boosted from 390 megawatts to 470 megawatts in May 2021, bringing the company's overall generating capacity of its 2 firms to 590 megawatts, according to the chairman of the group, Tony Elumelu. Now, Kenya is yet to open talks for a review of power purchase agreements signed over the years by Kenya Power, signaling further delay of the promised electricity bill cut for homes and businesses by 15%. Independent power producers revealed on Thursday that they were yet to receive invitations for talks on cutting wholesale power prices and ultimately lower consumer bills. And now to this interesting story. Eswatini, Africa's last absolute monarchy, is set to launch a flag carrier airline almost a quarter of a century after the previous one ceased operations in the country, formerly known as Swaziland. Eswatini Air will fly from national capital Mbambane to cities like Johannesburg and Cape Town in neighboring South Africa starting later this year. Kiniso Dlamini, Chief Executive Officer of holding company Royal Eswatini National Airways Corporation, revealed this in a statement. And finally, Italy's CNI has signed a deal to increase gas supplies from the Congo Republic by more than 4.5 billion cubic meters a year, the energy group said on Thursday. The deal is the latest Italian move to reduce dependence on Russian gas, with Foreign Minister Luigi Di Maio and Ecology Transition Minister Roberto Cingolani leading an Italian delegation to Angola and the Congo Republic this week to line up LNG contracts. And that brings to an end. That brings us to the end of a Business Edge for today. Of course, another edition will come your way on Monday, but then you can follow us on our social media platforms at New Central TV. You can also visit our website at www.newcentral.africa. And you can also download our mobile app on App Store and Play Store. I'm already gearing for the weekend. I hope you're doing that also. My name is Lekan Onabanjo. Enjoy a fantastic weekend ahead.